heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Hyde at Bloomberg's World Headquarters in New York.
And I'm Tim Stenovec, in for Ed Ludlow. This is Bloomberg Technology.
Coming up, we push ahead to the all-important vote results on Elon Musk's $56 billion pay package. That is Tesla's AGM. It kicks off.
Plus, we'll turn to earnings as Broadcom surges as AI demand boosts its results.
And we'll dig into the financial terms of Apple and OpenAI's partnership amid their landmark agreement. But first, let's check in on these markets because we've got more fuel to this fire. We've got still record high after record high across benchmarks. If you look in the S&P 500, it'd be your fourth straight record high on the day. We're seeing the Nasdaq up another 1/10%. Look, not the big gains that we saw yesterday, but we digest yet another cooling of inflation with the PPI report. The macro picture looks good. The 10-year yield falls down another 3-4 basis points, let's call it. Borrowing costs on the downside. Not so much love for European stocks, though. Still open to trade. We're off by 1.3%. More political anxiety happening in Europe. And perhaps, of course, digesting a big move that we had yesterday. Move on, see what's happening in the world of crypto, Tim. We have been seeing basically us holding pretty steady. We're off by about a percentage point. 67,000, interestingly coming off of those highs. So that moon music about risk on, not quite flowing into Bitcoin today. But what are you watching on the micro?
Well, speaking of records, I'm watching shares of Broadcom, ticker AVGO. They are just surging by close to 14% right now. The company did report earnings after the bell yesterday. It beat on the top line. It beat on the bottom line. The guidance surpassed analysts' expectations. The company also announced a 10-for-1 stock split. It's going to take effect next month. Investors are certainly cheering that news, sending shares higher. Widely seen as sort of a barometer for what's happening in the chip space. So checking in on some other chip companies, NVIDIA also at a new record right now, shares up by more than 2%. And then watching what's happening in the data center hardware networking when it comes to these AI data centers. Arista Networks also right now at a new record, up more than 4%. But speaking of shares surging, let's talk Tesla because shares are higher this morning. This after Elon Musk sent a tweet early this morning, again, as you mentioned, Caroline, the day of that shareholders meeting, saying that those two shareholder issues that were being voted on have passed or will pass by a, quote, wide margin. We're talking, of course, about that 2018 pay package that has been under so much scrutiny. In addition to that, the idea of the company moving its incorporation from Delaware to Texas. Shares higher right now by 3.7%. Not much can be said permanently about what happens with that pay package, but this vote widely seen as sort of a barometer, a test for how people are seeing Elon Musk's leadership at a time when the stock has been under pressure, down going into today's trade, Caroline, around 30%.
Let's get some expertise even further on this, Tim. Dana Hull joins us. And Dana, look, it's not going to have any implications on the court in the here and now. This still is all riding on a judge in the long term, but certainly it holds on Elon Musk from walking too soon.
Yeah, and to be honest, I was not expecting Elon Musk to front run Tesla's AGM. We thought we were going to get the vote results tonight, but clearly Tesla is keeping very close track of the votes that they do have. And a lot of votes came in yesterday. The deadline to cast a vote was late last night, and they've got the votes. I mean, if you believe Elon's tweet, and I don't think there's a reason not to, they have the votes on both his pay and on the move to Texas. And what this means is that many of the very big shareholders that Tesla was worried about either abstained or voted yes. And that's a super fascinating dynamic because some of the large funds like Vanguard actually voted no in 2018, and they are the largest shareholder in Tesla after Musk himself.
Dana, that's what surprised me so much about this vote. You had these large asset managers such as Vanguard that you just mentioned voting in favor of this. Do you know anything about why they switched or the sort of strange bedfellows here in terms of who's voted for and who's voted against?
Well, to be clear, Vanguard has not said anything yet. We don't know for sure how they voted. But if
I should say this, sorry, the New York Times reporting early this morning.
Yeah.
Excuse me.
We have not confirmed that ourselves, but if you look at the vote count, just a lot of yes votes came in yesterday, and they have to be the big votes from the shareholders: Vanguard, BlackRock, Geode, State Street. So yeah, and it's interesting too because both ISS and Glass Lewis, the big proxy advisory firms, were no on the pay package. And that's why Tesla was so aggressively courting retail investors. Tesla was worried that they didn't have the votes from the big funds, and they were actively courting retail. We know that they were actively courting the large shareholders too, but something's turned their way, and I think they've got it. I mean, so tonight we'll get the final tally, but I mean, you're going to see an ebullient Elon Musk take the stage at the AGM today.
All right, well, we'll certainly look forward to that again, starting at 4:30 Wall Street time today. Bloomberg's Dana Hull, thanks so much for that. Well, turning now to Apple, when CEO Tim Cook announced the company's partnership with OpenAI, they didn't disclose the financial terms of the agreement. For more on what we know about the deal, let's bring in Bloomberg's Lynn Duan. She's here in our studios in New York. What do we know about the financial terms of the agreement? Just zeros all around?
Hi. First, thank you for having me. Second, there are no financial terms, apparently. It's funny because I feel like that was the biggest question on that day when they announced this partnership. It was like, okay, so who's paying who? Who's making money here? It turns out there is no money exchanging hands, at least at the onset, right? What's actually happening is, according to Apple reporter Mark Gurman's sources, is Apple believes that there is enough value, maybe even more value than monetary value, to OpenAI and having its products on a ton of Apple devices across the board. The promotion of their product there offers them a business proposition. If people want to, say, go from the free version of OpenAI to the paid version for $20 a month. So that's the proposition to OpenAI. And for Apple, it's clearly a value add in allowing users like me and you to be able to access OpenAI and all of the tools, the AI-generated, content that it has on our Apple devices.
There has been some cost, apart from Elon Musk's ire and claim that he'll ban Apple iPhones going into any of his companies. But this integration will actually cost OpenAI something, right? Because, well, they've got to pay for the compute if everyone starts using it.
That's right. And the idea behind it is that in the long term, this cost, this investment that they're making will pay off, both for Apple and for OpenAI. For Apple, I think that the long-term advantage here, the reason why they are making partnerships with OpenAI and are trying to make partnerships with other AI developers, by the way, this is not an exclusive arrangement, is that hopefully one day they will be able to monetize it through revenue sharing agreements. So anytime one of these AI developers is able to sell a subscription through an Apple device, hopefully Apple will get a cut from it. That's what Apple hopes. And as far as the AI developers go, they are willing to give this investment in the hopes that it will generate more revenue. And mind you, this is a big push for OpenAI right now. They're under a lot of pressure to show that they can not only generate revenue, but that they can generate enough revenue to turn a profit. And that's what they really need in order to keep all this AI compute going, is more and more money coming into the institution to fund it. It's a lot of data center capacity.
A lot of data center. Maybe they're saving a little bit by Apple not getting a cut on the ChatGPT app for now, but certainly lots of way that this can be earning some bucks. We thank you. That was a perfect summary, Lynn Duan of Bloomberg. Meanwhile, coming up, we'll go break down Broadcom's pretty sensational results, actually. Shares surging, as Tim outlined a little bit earlier. It's all on, guess what? AI demand. But we want to go back, actually, to what's been happening overseas with BYD, Chinese EV maker, of course, actually traded here in the US for some ADRs. We're higher on the day, and that's as we start to digest the EU tariffs, which initially was a shock, but actually we think this perhaps is slightly less of a tariff than had been anticipated, 17% for BYD, and actually they can stomach it if they're going to continue to sell into Europe. This is Bloomberg Technology.
Well, shares of chip supplier Broadcom surging after the company reported earnings that were boosted by demand for AI products. Joining us now for more is Kunjan Sabani of Bloomberg Intelligence. Kunjan, these results just exceeded all analyst expectations on the top line, the bottom line, guidance as well. Remind us of the space that Broadcom plays in. A huge Apple supplier, of course, but tell us about the AI element here.
Yeah, so they have two core AI businesses. One is the ASIC accelerators, which is alternative to merchant GPU, what someone like an NVIDIA provides. So mainly focused on the large cloud players and hyperscalers like Google, Meta, Microsoft, etc. And the second is the AI networking or the overall networking business, which until now was the biggest piece, which is where basically the pipeline that runs, the data center runs on. So anything outside of the CPU, GPU, and memory, that's basically all the networking components.
Kunjan, we have clearly some competitor inching into the space when you think of NVIDIA. It's a good, strong number two. But what's also interesting is they're taking a leaf out of NVIDIA's book. They're doing a stock split.
Yeah, I mean, that seems to be the trend these days. You beat on good AI results and do a stock split, and you see what happens, double-digit stock growth. But I think from a competition point of view, from in the near term, in terms of use case, we don't think they're really competing with each other because the use case right now are different, and there is no hurdles to growth for both companies. But I think in the long term, it definitely will compete, not in the use case, but more in the wallet share, because the cloud providers and hyperscalers would have limited budget to spend.
And designing their own chips slowly but surely. Really interesting, Kunjan Subramanian. We thank you so much of Bloomberg Intelligence. Rounding up on what is happening for Broadcom, but let's broaden out. Is all the play in AI about the infrastructure space, the picks and shovels, the actual chips, or what about the applications? What about the large language models? We've got the perfect voice to really dovetail that with federal policy reserved. And it is Joe Zhao, his Millennia Capital managing partner. Joe used to work over at the Fed, so you are the perfect person to sort of outline whether in this environment, where eventually we might get one, maybe even two cuts this year in terms of overall policy, you should be putting yet more money into a Broadcom, into an NVIDIA, into some other AI plays?
Yeah, look, like taking a step back, I think that we're in this huge AI build out, and there's a couple ways you can play this market. You could participate in a semis ETF. You could pick the winners. But I think what I'm thinking in my head is, I think there's some naysayers who are saying, well, this AI build out we're going to see the peak of the curve in the next couple of years. I personally think that this hyper growth phase in the semis will probably go on for years, just because I think what the street is not saying is that there's going to be a lot of incremental demand from some of the tech laggers that will need to catch up on AI. There's going to be foreign buyers from, let's say, Europe and emerging markets. And lastly, I think what we're also thinking is there's going to be a lot of training and retraining of AI. AI is like software. Every time, on your iPhone, you got to update your software every single week. So in AI, as there are new data becoming available, you have to update the AI, you have to retrain. So I personally think that the AI, the infra trade has a lot of room to go.
Well, Joe, I'm sticking with your experience on the Federal Reserve because, look, at the end of the day, rates are pretty much everything when we're talking about this stuff. I'm wondering how you're thinking about these high-flying tech companies and what exactly is priced in with regard to rate cuts. Are we going to see still moves higher even after the Fed does cut rates, if it does cut rates this year, or is that already priced in?
Look, as a former staffer and now founder of our firm, I take the view that it's important to look at the long-term directions of interest rates. In economics, there's a saying like, we're 90% confident, we're 95% confident, we're probably 90% confident that there's going to be at least one rate cut sometime in the next 9 months. So whether it starts in July, September, December, or January, I think is not as important to me as an investor because the directions of the rates are coming down. So what that means is what you can do is to put, I think there's one more thing that I think the street often gets wrong out, and I'll say this for the record, is I think the street puts a lot of emphasis on the dot plot chart. And I think what I would do is probably put 60% of your weight on the dot plot chart and put 40% of your own research analysis into the thinking. So you come up with your own framework to what you think is going to be the path of interest rates, and then you put that into your financial model, your DCF model on Excel, and then you can sort of figure out what you think is fair value on the S&P, on NASDAQ, and on the stocks. So for me, I just take a step back. I'm less worried about whether the cut starts in September or December, but I think there's a rate cut coming, so that I'll just put that into my model, and then that'll be able to help me make better decisions as an investor.
You're betting on the trend. And you're betting actually on private companies. I'm thinking of Anthropic you put money into, some of the large language models. Dissect for us where the money then now is allocated in this space. Is it the large language models? At what point do we start seeing more money allocated to the applications, the use of these large language models?
Yeah, so there's sort of 6 broader themes of this AI value chain in my head. If you start from the very bottom, right, you have electricity, you have data centers, you have cooling centers, and then on top of that, you'll have chips, so it's the semis, and you have the data owners like the Max 7, and then on the top you have the large language models, and then you need human talent, you need smart people to train the AI and work on it. And then lastly, you need we're going to build the applications. I think as an investor, you can obviously play this AI trade in public markets by buying public stock, the QQQ. But in private markets, what we're doing is we're sort of an ETF in the private markets in that we're invested in Anthropic, Lambda, Cohere, because these are the innovations companies happening in the private markets. But there's also other ways to play this AI trade, because you could also be investing in utilities. You could be buying data centers. So I think there's different ways, but I think the fundamental thesis in my head is that it's a foregone conclusion whether AI is real. In fact, I think AI is going to be, like software squared, the internet cubed, if you will, excuse me. But I think the biggest question in my head is actually AI regulation. But that aside, I think when you take a step back and you look at some of the companies in this AI trade, we're at the very beginning where, you can think of it like a 2-year-old baby. And so the saying is, in plain words, if this baby at 2-year-old can do what it can do, imagine when that baby matures as an adult, how much more that person can do.
Okay, well, as a venture capitalist, you're thinking about that baby as an adult. So very briefly, paint a picture for us about what AI can do when it's 19 years old.
Yeah, then we're talking about the 6th layer, which is the application layer, right? So there's, I guess the industry phrase here is called vertical software, which is you can apply AI in cybersecurity, in automation, in robotics. There's a company called Figure AI that's combining robotics with AI. We're invested in an AI cybersecurity company called Deep Instinct. But you can also apply AI to pharma research, to many other fields that we haven't even thought about. There's one thing I got to say that's really, really important. When we think back at the major technological innovations of the last 200 years, whether it was electricity, the engine, the internet, how did we as a humanity create that? We did it with human intelligence, people working together. Yeah. What happens now when you can recreate intelligence, you can recreate many, many Thomas Edisons. So there's many infinite possibilities that we can create. So what I'm trying to say is it's really, I think, about how we nurture this technology in a way that's going to help us, helps humanity move forward and grow in a way that's responsible.
Joe Zhao of Millennia Capital, thanks so much for joining us. Certainly do appreciate it.
Time now for Talking Tech. First up, startup Aleph Alpha says, look, AI must grow beyond chatbots in order to be profitable. Speaking to Bloomberg, the CEO, Jonas Androulis, says businesses need more specialized models other than LLMs that power the likes of ChatGPT. He went on to compare the current AI craze to the likes of the dot-com bubble of the late 90s. Plus, Norway hits Meta with a complaint over their plans to use images and posts from Facebook and Instagram to train AI models. Now, the Norwegian Consumer Council says Meta has made it, quote, deliberately cumbersome to opt out of the AI scraping process, which would violate EU data protection rules. Meanwhile, OpenAI CEO Sam Altman says the company is on pace for a $3.4 billion annual revenue. Now, according to a person familiar with the matter, Sam Altman's addressing staff, and in an all-hands meeting Wednesday, he added that the company was on track to generate $200 million from this AI partnership through Microsoft Azure.
Well, sticking with AI, Adobe out with earnings after the bell, where investors will be focusing on the company's AI progress and if customers are spending for it. Joining us now is Bloomberg's Brody Ford. Brody, good to see you this morning. I'm wondering where the context is here, because shares are down more than 20% going into the print later today. And the company plays in an interesting space because it provides AI services, but at the same time, it's software as a service, which has just been beat up this year as companies have shifted their budgets more to hardware. What has beat up the company more going into earnings? Is it competition, or is it a lack of spend when it comes to software and services?
Yeah, Adobe is one of the more interesting AI debates out there because, like all software, it's been the question of, are they benefiting from AI or are they getting replaced by AI? Adobe is famous for their creative portfolio, Photoshop, video editors, and they've introduced new features to be able to generate imagery in there. The key fear for investors is that over time with AI, if I'm able to type in, I don't know, TV show anchors talking about tech, am I really going to need, Photoshop to do that? Am I going to need a video editor to do that? And our small business is going to stop using these licenses so much, right? And so Adobe has spoken a big game about AI uplift for probably over a year now. It really hasn't shown up in the numbers. And so investors are starting to feel like, hold up, maybe these numbers aren't going to really come.
But Brody, the numbers ain't that bad in terms of growth of still 10% for revenue expected,
right,
and actually consistently going to be about 10, 11% for the next few years. So where is the anxiety eventually going to show up? Where are we going to actually see them eroding some of that revenue gain?
Yeah, it is for sure a long-term risk. I mean, I haven't seen a whole lot of evidence of companies, for example, ending their Adobe licenses and saying, I'm just going to use DALL-E to generate images. The anxiety is that there's a lot of new spending going toward these AI startups, and in theory, that new spending should have been going towards a software incumbent like Adobe. I mean, it is such a small metric investors focus on here with one of the craziest acronyms. It's like net new annual recurring revenue for their digital media segment. And that has gone down bit by bit, again, because there's this sense of like, hey, maybe they are not getting new workloads that are ending up in the hands of Runway or DALL-E or Midjourney.
Hey, Brody, I'm wondering what you see, or analysts see rather, as the biggest competition out there right now from the upstarts that exist. Is it the LLMs or is it the bigger companies that are starting to adopt what the LLMs kind of started doing earlier?
It's definitely not the bigger companies. I mean, Adobe is the incumbent here. I think the biggest anxiety point is Canva, and has been for a long time. That great Australian startup, they're known for making the templates that you might end up seeing on Instagram or you might see at your friend's wedding. They've just made it a lot simpler to do quick design. It's a little cheaper. It's all on the web. I mean, that's who Adobe investors have been anxious about for a while.
Yeah.
On the upstart side, it is more of those large language model makers who are generating images.
Brody, thank you for joining us. All eyes on Adobe after the bell. Welcome back to Bloomberg Technology. I'm Caroline Hyde.
And I'm Tim Stenovec in for Ed Ludlow.
Let's get a quick check on these markets, Tim, at the moment, because we're currently seeing higher just when you're looking at technology stocks, and US trade more broadly, S&P 500 at a new record, NASDAQ at a new record, two-year yield moved by the fact that PPI is showing once again inflationary pressures dialing back. Stock 600 over in Europe just finished trade, I'm afraid, to the 1.3% downside as we still digest political risk and maybe, a repathing of where Federal Reserve pushes rates and people having some anxiety over that. Move on, have a look at some of the individual movers, because record high for Broadcom, 13% on the nose higher. They're doing what's rather in vogue at the moment in a stock split by 10, so we'll see perhaps a little bit more retail come into this chip maker that is also on a tear when it comes to AI demand. Their revenue really managing to impress, and the guidance too. MicroStrategy off by 6%. Why? More supply coming, but this time in convertible notes. Why is Michael Saylor selling converts? Because he wants to buy more Bitcoin, Tim. And Tesla is currently up by 3%. Look, that AGM is going to be starting later today. We seem as though shareholders are voting in favor not only of that $56 billion pay package that was held from 2018, but also the move to Texas. The question is, will that judge think similarly? We want to get on to another company at the moment, and I want to discuss what's happening over at Intuit. Intuit MailChimp is coming out with a new revenue tool. It's a system of predictive and generative AI models. Basically, it's designed to help marketers win more revenue. You're going to send the right email at the right SMS at the right time with the right conversion. Intuit CEO is going to talk us through it. Sasan Kodalzi joining us for more. And this is about artificial intelligence, really in the here and now, Sasan. You have been talking up AI. You've been reworking your business since the time you came in as CEO. I want to, kudos to you for talking about it before the rest of the market did. But how is it actually going to generate revenue for you?
Well, first of all, thank you so much for having me. What we announced today is a really big deal. Let me first quickly start with context and then talk to what we launched and how over time it will generate revenue for Intuit. Strategically, there are three big things really that we've declared. One is shifting from building workflows where customers do the work to get to their financial outcomes to workflows where we do the work for our customers.
Right.
The second element is that embedding AI-powered experts, human experts, within every workflow so that there's never a dead end for customers. When there's a dead end with the technology doing the work, our experts that actually sit on our data and AI platform can be the assistant for consumers and small businesses. And third, to take our game to the mid-market and small enterprises and really serve our customers in ways that they could never imagine possible. Specifically, what we announced today on our Intuit MailChimp platform is what we call revenue intelligence. You know, one of the things that small businesses care about most is revenue growth and profitability growth. And within that, their cash flow matters a lot. And so revenue intelligence does something remarkable. It leverages all of our customers' data across MailChimp and QuickBooks, and it, in essence, helps them with understanding how they can drive customer and revenue growth. So imagine showing up to work every day.
I'm just gonna think about imagining as a consumer here, though, because I can see how this might be music to a marketeer's ears. But me as a consumer, do I want more SMSs? Do I want more emails? Do I want more marketing heading my way?
Well, if I finish the thought around the small business and the impact it will have to the consumer, in essence, the small business can understand which customers they have an opportunity to provide more services to, where they can drive more benefits and profitability. And for a consumer, let's use Couch as an example, or New Chairs as an example, as a furniture store that you just came out with. As a consumer of those devices or those couches or chairs, I have an opportunity to know what's available, and I have an opportunity to know where I can modernize my house. And so from a consumer perspective, the benefit is significant. And consumers actually, believe it or not, 95% of consumers love to digest SMSs because they're short, they're sweet, and to the point. And it has an enormous impact for consumers and a big impact for small businesses. And ultimately, to answer your question, the more we can help drive revenue and profitability growth for small businesses, the more we have the capability to monetize and be able to drive growth for Intuit. So we're very excited about what we launched today.
Sasan, I want to talk about the TurboTax business, because you've spoken recently about the idea of looking for more customers who actually use human accountants to adopt TurboTax and not use those accountants anymore. Forgive me for getting personal here, but there's a reason I'm asking this question. I would imagine you have a very, very complicated tax situation as the president and CEO of this company. Do you use TurboTax for your taxes?
A great question. First, let me start with answering your first question, then I'll answer your question about myself. You know, first and foremost, there's a $35 billion total addressable market. And of that $35 billion, $30 billion is consumers and small businesses that actually go to somebody else to have their taxes done. And that's really where we've built out the platform, where it sits on a data and AI platform where we can do your taxes for you. From a governance perspective, I do not use TurboTax because it's important from a governance perspective that somebody else does my taxes for me outside of our platform. So that's the reason why I don't. I would love to do it because we have great experts.
What I was going to say is, do you ever picture a time where somebody with as complicated a tax picture as the executive of a publicly traded company can only use a product like TurboTax for their taxes? Does that day come, and if yes, when?
Well, first of all, we can do that today. If there wasn't a governance issue, I could have one of our experts do all of my taxes today. You know, our experts can today do anybody's taxes for them, and it's all digital, it's all AI powered. And we have multiple second reviews within our platform to ensure that your taxes are done accurately and that you're either getting the largest refund or if you have a balance due, that you're paying the right amount. But today, anybody can do their taxes on our platform and have us do it for them because we have all of the expertise, all of the data and AI capabilities with the best experts in the industry on our platform.
Yeah, we were just seeing, Sasan, how well your share price has been doing of late. And in many ways, of late, we've seen it pop because there's a price increase coming, according to Mizuho analysts in particular, who is outlining what that's going to do for your revenue. Sasan, how big an increase are we going to see for QuickBooks? Can you give us a sort of level revenue, indeed a natural price point?
Yeah, sure. I mean, first of all, I would start by saying that we've had significant innovation on our platform in the last year. Across all of the elements of our platform, whether it's the ability to be able to fuel your success, drive your revenue growth or profitability, and or having our experts help you run your business as a small business. And we always price for value. And so this is very much sort of in line with our pricing strategy and our pricing principles, where we are raising prices all the way from those that today start out to fuel their success as a small business and follow their passion, to mid-market customers. And we've gotten great feedback relative to the innovations that we've delivered in the last year, and we're just simply pricing for value, and we're excited about the possibilities.
I just want to talk about Mint, because there was a lot of sadness when you guys shut Mint down. And I'm wondering if you've seen those customers move over to Credit Karma's products.
Yeah, well, first of all, I'll start with what Mint actually, who it served. It served what we call prime customers, those that generally have credit scores of above 700. And when we thought about our vision as a consumer platform, we want to have a self-driving platform where we can serve you early on in your life to help you build your credit, all the way to how do you build wealth over time. And so given that vision, we actually brought Mint and Credit Karma together so we can serve all of our customers, from those that need to build credit to those that have great credit scores but also have different needs, all on one platform. We actually had more than what we had assumed convert to Credit Karma. In fact, the majority of our customers converted to Credit Karma, particularly because of all the capabilities that we have on Credit Karma to be able to serve our prime customers. There are a very small cohort of customers that did not convert. These are customers that really their love is budgeting tools, budgeting goals, and those are some of the capabilities that over time we're building in Credit Karma but are not available today. I would tell you some cohort of customers were very sad that Mint went away, but actually the majority of our customers are delighted to be on Credit Karma now.
I'm going to ask Tim off set whether he's delighted or heartbroken, but I'm interested, Sasan, lastly, we did just get some recent news out of the IRS. Basically, there's going to be a free tool, the US government in particular, supporting Americans who want the option to file directly with the IRS as ultimately to be in charge of their own taxes. Is this going to be a competitive threat? Are you going to lose people to this free tool?
I mean, the short answer is no, because free is already available to all Americans today. And so with what the IRS has launched, it's just yet another free tool. So it is not a threat to us because free is already available across all private companies. We also don't believe that it's the best use of government money to come out with another tool that's free where free is already available. It's not the best use of money. We'd love to see more money go towards the service that the IRS provides to take very good care of the citizens. But nevertheless, as far as a threat for us, it really is not.
Intuit CEO Sasan Goodarzi. Sasan, thanks so much for joining us. Appreciate it.
Thank you for having me.
Well, coming up, we're going to be joined by Amber Atherton from Patron to talk all things gaming and VC. That's next. This is Bloomberg.
On today's VC Spotlight, let's talk about the health of the video game industry, of social networks, of groupings, and whether we might see actually an uptick in investment in the second half of the year into these sorts of processes. Amber Atherton's with us, partner at the early stage venture firm Patron. And Amber, you're all in on sort of networks of people, of thinking and of gaming interaction online, having been a founder, now a VC. What is artificial intelligence doing to the conversations you're having at the moment?
Yeah, I mean, well, good to be back. Thanks for having me. I think after selling my startup to Discord, I saw firsthand that this younger generation really see gaming not just as entertainment, but as a social network. It's where they hang out with their friends, and I think you're seeing us move towards a more community-driven, multiplayer internet. And so I think when you see AI as part of that story, I mean, if you look at NVIDIA, you look at Microsoft, all of these are companies that started out serving the gaming market, and it's not a surprise that they now have an edge on AI because they start out serving gamers who are very early adopters to new platforms. They have huge demands in terms of graphics and infrastructure. So I think we're very excited about startups that are using gaming as a wedge to further improve AI.
Well, Amber, I want to talk about one of your most recent investments. Caroline and I were talking about it a little earlier. The company Aria just announced yesterday. It's interesting because AI sort of goes into the background there with sort of this AI-powered concierge. Talk a little bit about what exactly this investment is, because it's not completely in the world of gaming, as in you're playing games against somebody else in a virtual world, but it actually takes a real-world approach.
Right, exactly. And I think part of Patron's thesis is that gaming can be a source of good and better goodness for the world. And so I think when we're looking at gaming, it's from a broader lens of, yes, we have bets in studios, but we also look at how gaming is influencing broader consumer technology. And Aria is a good example of this, where AI doesn't have to completely replace human interaction. And in fact, what Aria is doing is helping couples increase their relationship strength, be better partners to each other through this wonderful hybrid of an AI concierge, physical boxes, and a lot of content. So we look at it in a much broader lens, and I think companies like Aria have a really great shot at using AI in a way that doesn't isolate human connection.
Digital human beings is the thesis around Altera, a different portfolio company of yours, and you're investing alongside the likes of Eric Schmidt in this one particular. It's about lab building agents, and how does that fit into a gaming context? Are you going to be gaming alongside agents? Are they going to be within in the worlds one's creating?
Yeah, I think it's very rare as an investor to witness a paradigm shift in terms of how humans interact with computers. So when we met the founders of Altera, we were very excited about what they were building. In the initial phases, it's very much you're able to game with an AI agent instead of a friend or with a friend. But where that's ultimately going is toward digital human beings. So I don't think it's inconceivable to think that in the future we will have AI agents and AI friends that provide more than utility, but companionship, friendship, and you're able to play games with them. They're able to assist you in your life. And so I think Altera is a very interesting example of using gaming as a wedge to ultimately serve a much, much broader consumer market.
Look, you wrote a book about online communities. They're real people having real relationships via internet. Now we're thinking about how we're going to be playing against totally false agents who are not actually real humans. And we're thinking about building our own intimacy via bets that you're making through the power of AI. Are you feeling comfortable with the direction of travel of artificial intelligence and humanity at the moment? Do you think it's ultimately helping or hindering in some way?
I'm in the business of optimism. So for me, it's that AI is not replacing humans. AI is augmenting humans. AI is bringing a new dimension of fun and personalization into so many different consumer interactions. And I think for us as Patron, we invest across this spectrum of play. And I think it's very difficult to see where consumer technology and AI is going if you don't understand gaming. So for us, we are excited about founders that are operating at the earlier stages, seed stage, and are using AI to really be a force of good in the world.
Amber, who's the platform winner in the world that you envision in the coming years? Is it iOS? Is it Android? Is it Nintendo? Is it Microsoft? Is it Sony? Or is it somebody we're not even talking about?
I think you've mentioned a lot of very interesting names there who are all experimenting at the forefront of, different technological edges, whether it is AR, VR, which we talked a lot about last time, Caroline, or whether it is AI. And so I think that looking at the gaming stocks, particularly, a Discord, if you look at Reddit, one of the most oversubscribed IPOs, and actually even a company like Webtoons that is adjacent to gaming, those types of platforms are very, very interesting in terms of where the next generation is spending their time. They're growing up on games. Half of US 8 to 10-year-olds play Roblox every single day. So I think looking at those stocks and those gaming companies is where you'll see the platform breakouts.
Amber, going to have to leave it there. That's Patron partner Amber Atherton joining us from California. Thanks so much.
Now, on Wednesday, fired SpaceX engineers filed a lawsuit against Elon Musk for sexual harassment and retaliation. That was over in a California state court. Now, this escalates their multi-front legal battle with the billionaire chief executive and his aerospace company. Now, the California suit claims that Musk posted sexual photographs, demeaning commentary, and chose to fire employees for speaking up. Josh Idelson joins us now for more to discuss. 8 employees here, and this isn't the first time we've heard from them.
That's right. This is a case from 2022 in which, as you said, workers, engineers say that because they worked on an open letter raising concerns about the company's culture and Musk's behavior, asking whether the company's policies were being applied equally to the chief executive, asking whether this was the kind of culture they wanted to bring to Mars, that as a result, they were fired. They brought a case to the U.S. Labor Board, which issued a complaint saying they were illegally retaliated against in violation of federal labor law. Now, that case at the Labor Board is essentially frozen by a federal court injunction because SpaceX responded by accusing the U.S. Labor Board of having an unconstitutional structure. So now this is a different front where these workers are saying that the company also violated California state law. And in this case, they are able to name Elon Musk personally as a defendant. They're also able to seek damages that the Labor Board can't.
Now, we want to get to the response from SpaceX and Elon Musk. They've not immediately responded to the request to comment on the lawsuit. They've previously denied, though, wrongdoing, as you said, and said the fired employees violated policies and that Musk was actually not involved in their termination. But ultimately, have we seen responses coming from the business, more coordinated fashion, to try and tackle at least some of the issues that are now being circulated amongst citizens as well as those within the company?
Well, we've seen in the Wall Street Journal, for example, Gwen Shotwell, the company's president, saying that allegations that have been made don't reflect the culture at the company. The lawsuit that these fired engineers filed seeks to get a court to force the company to change its policies to address what they say is the company and the CEO knowingly creating a hostile work environment and retaliating against people for bringing it up. They note that Musk has publicly mocked misconduct allegations against him in the past.
What could the implications be for SpaceX if these engineers are successful in their lawsuit, and the implications for Elon Musk as well?
Well, they're seeking damages. They're seeking an injunction that would force the company to change its behavior. One question here is how much the entities that SpaceX contracts with care about this, including the US government. Elon Musk has shown a lot of tolerance for controversy and for legal battle and for appeals, as we've seen in a number of cases. We will see if the company chooses to change anything in response to this escalating controversy.
Does it have any implications for Tesla or any of Elon Musk's other companies?
Well, people who've come forward with allegations have said that they see patterns at each of these places in terms of the company's behavior and in terms of the CEO's willingness to continue taking the approach that he's taken, even in the face of public embarrassment and allegations. The company, again, is denied wrongdoing.
Bloomberg's Josh Idelson here in New York. Josh, good to see you. Thanks for joining us on this. Do appreciate it.
Thank you.
Great to have him in the studio. Meanwhile, that does it for this edition of Bloomberg Technology. You don't want to forget to check out our podcast. You can find it on the terminal as well as online on Apple, on Spotify, on iHeart. Tim, it's been great having you sat next to me, and there's so much more to digest going forward in the rest of the day.
Should we do this again tomorrow?
Yeah, that'd be nice.
Okay, cool.
You could stop by.
Yeah, I'll be here.
Make your day a little bit longer.
Good. Sounds great.
We're going to be watching the all-important Tesla AGM a little bit later. Stay tuned for it. This is Bloomberg Technology.